The global financial system currently faces an unprecedented crisis, driven by the escalating military conflict within the Middle East region. The sudden outbreak of war involving the United States and Iran has severely disrupted international trade. Investors worldwide are reacting to these geopolitical shocks by rapidly moving their capital into secure assets. This extreme market volatility centers around the extraordinary appreciation of the United States dollar. Global financial markets view the American currency as the ultimate safe haven during times of immense geopolitical distress. Massive capital outflows from emerging economies have directly strengthened the greenback, while severely weakening numerous vulnerable international trading currencies. The fundamental reconfiguration of global currency preferences has completely altered traditional investment strategies. Historically reliable assets like the Japanese yen and the Swiss franc have failed to provide the expected protection. Traders are abandoning these formerly stable instruments because regional vulnerabilities and energy dependencies have compromised their intrinsic fundamental economic value. The core driver behind this economic instability remains the complete closure of the Strait of Hormuz. This vital international maritime chokepoint handles a massive portion of global petroleum shipments every single passing day. The sudden blockade has effectively paralyzed international energy markets and triggered profound supply chain disruptions across multiple industrial sectors. Crude oil prices have skyrocketed to unprecedented levels following the physical interruption of global tanker traffic. Heavily energy-dependent nations are scrambling to secure alternative petroleum resources from other producing regions. This dramatic supply shortage has forced governments to implement emergency conservation measures while simultaneously depleting their strategic national petroleum reserve stockpiles. The immediate economic consequence of this severe energy shortage is a massive resurgence of global inflation. Industrial manufacturing facilities face exponentially higher operational costs as electricity and raw fuel prices multiply rapidly. Consumers are already experiencing significantly elevated retail prices for basic necessities and essential transportation services across all major metropolitan areas. Central banks around the entire world now face an absolutely impossible dilemma regarding their monetary policy decisions. Raising interest rates to combat inflation could easily push fragile economies into a deep recession. Conversely, maintaining lower borrowing costs will likely cause further currency depreciation and exacerbate the ongoing inflationary crisis facing civilian populations. The Federal Reserve of the United States holds a uniquely powerful position during this extremely volatile period. American monetary authorities are carefully monitoring domestic inflation metrics while assessing the broader international economic fallout. Any decision to tighten liquidity further will inevitably attract even more foreign capital into the already surging American currency. Asian economies are particularly vulnerable to these intersecting geopolitical and financial crises occurring simultaneously. Industrialized nations like Japan and South Korea rely almost entirely on imported energy to power their massive manufacturing sectors. The collapsing value of their national currencies makes purchasing expensive foreign oil an increasingly unsustainable financial burden today. The Japanese yen has depreciated significantly despite repeated verbal intervention threats from national government officials. The Bank of Japan remains trapped between supporting economic growth and preventing a total currency collapse. Market speculators continue betting against the Japanese currency, as the fundamental interest rate differential with the United States remains incredibly wide. South Korea faces identical structural challenges as its heavily export-driven economy struggles with rapidly rising costs. The Korean won has reached alarming lows against the dollar despite strong domestic dollar liquidity reserves. Authorities must balance the need for competitive export pricing against the dangerous reality of imported inflation, devastating consumer spending. The People's Bank of China has adopted a vastly different approach to successfully manage this turbulent environment. Chinese monetary officials are carefully guiding the yuan to maintain essential stability amidst severe global market chaos. Their vast foreign exchange reserves provide a necessary buffer against the aggressive speculative attacks targeting other regional currencies. Despite the relative stability of the Chinese currency, the broader regional economic outlook remains highly precarious. International investors are rapidly liquidating their financial positions in emerging Asian equity markets to secure capital. This massive capital flight further suppresses economic growth potential and limits the ability of developing nations to fund critical infrastructure. European markets are simultaneously experiencing extreme distress due to their geographical proximity to the escalating conflict. The European Union was already struggling with the severe economic fallout from previous geopolitical energy crises. The sudden loss of Middle Eastern petroleum imports threatens to paralyze the entire European industrial base during the coming months. The European Central Bank must now navigate an incredibly hostile macroeconomic environment with severely limited tools. Regional inflation has surged past all projected targets due to the sudden spike in energy costs. Policymakers are effectively forced to maintain restrictive monetary conditions, even as industrial production numbers indicate a severe continental economic contraction. Agricultural supply chains have been critically disrupted by the ongoing naval blockade located in the Gulf. Fertilizer production requires immense amounts of natural gas, which is currently trapped behind the military conflict zone. Consequently, global food prices are rising exponentially as farmers struggle to secure the necessary inputs for their upcoming harvests. The global scarcity of essential agricultural inputs poses a severe threat to international food security today. Developing nations that rely heavily on imported grains and fertilizers are facing immediate humanitarian challenges. International relief organizations are warning that widespread famine could become a reality if the maritime shipping routes remain closed indefinitely. Beyond energy and agriculture, the escalating conflict has severely impacted the global plastics and petrochemical industries. Refineries located near the war zone have completely halted operations to protect their vulnerable personnel. This shutdown has created a massive shortage of raw materials required for manufacturing medical supplies and essential consumer packaging products. Technology companies are also feeling the immense pressure of these unprecedented global supply chain disruptions. The physical manufacturing of complex semiconductor components requires specialized chemicals that are suddenly in short supply. Consumer electronics manufacturers are warning investors about significant production delays and dramatically reduced profit margins for the current fiscal quarter. The United States stands out as a unique beneficiary amidst this widespread international economic devastation. The American economy possesses robust domestic energy production capabilities that provide crucial insulation from external shocks. Furthermore, the persistent strength of the national currency significantly reduces the actual cost of importing necessary foreign goods and services. Despite these apparent advantages, the American economy is not entirely immune to the worsening global crisis. Multinational corporations based in the United States are reporting severe revenue losses from their international operations. The strong dollar makes American exports significantly more expensive for foreign buyers, struggling with heavily depreciated local trading currencies. Equity markets in New York have experienced extreme daily volatility as investors struggle to process the news. Brief periods of optimism regarding potential diplomatic resolutions are quickly erased by reports of military escalation. Traders are desperately seeking clarity regarding the long-term implications of this unprecedented conflict on corporate profitability metrics. The international bond market has witnessed an equally dramatic transformation during this period of geopolitical instability. Treasury yields have fluctuated wildly as inflation fears battle against the overwhelming demand for safe assets. Investors continue purchasing American government debt because it represents the only reliable store of value in a chaotic world. Physical gold prices have traditionally surged during times of war and international economic uncertainty. However, the current crisis has broken this historical correlation due to the overwhelming strength of the dollar. While gold remains a popular alternative asset, it simply cannot match the universal liquidity provided by the American reserve currency. Institutional fund managers are radically adjusting their portfolio allocations to survive this hostile financial environment. High-risk speculative assets and emerging market equities are being systematically liquidated across all major trading platforms. Capital is being concentrated entirely within cash equivalents and short-term government bonds to preserve wealth against sudden shocks. The global insurance industry faces catastrophic losses due to the destruction of maritime vessels and infrastructure. Shipping companies are completely unable to secure coverage for vessels attempting to navigate near the conflict. This lack of insurance effectively guarantees that the crucial maritime trade routes will remain entirely closed for the foreseeable future. National governments are heavily subsidizing energy costs to prevent absolute social collapse within their domestic populations. However, these massive fiscal expenditures are rapidly expanding national budget deficits to completely unsustainable levels. Sovereign debt ratings for numerous developing countries face immediate downgrades as their financial reserves are depleted by emergency spending measures. The International Monetary Fund has issued urgent warnings regarding the stability of the entire global financial architecture. Developing nations burdened with dollar-denominated debt face an impossible task as their currencies collapse. Sovereign defaults are becoming increasingly likely unless a coordinated international relief effort is organized to provide emergency liquidity assistance. The World Bank is currently mobilizing immediate emergency resources to assist nations facing acute food shortages. Unfortunately, the sheer scale of the crisis severely limits the effectiveness of these traditional international interventions. The organization must prioritize the absolute most vulnerable populations, while encouraging wealthier nations to increase their direct financial contributions. Diplomatic efforts to negotiate a ceasefire have repeatedly failed due to the deeply entrenched regional political positions. Both sides of the conflict remain fully committed to achieving their respective strategic military objectives. Consequently, financial markets are slowly beginning to price in the terrifying reality of a prolonged and highly destructive regional war. The massive military deployment in the Middle East has dramatically increased government defense spending across the globe. Defense contractors are experiencing an unprecedented surge in new orders for advanced weapon systems and munitions. This localized economic boom provides a stark contrast to the severe recessionary pressures devastating almost every other commercial industry. Global commercial aviation has been practically grounded due to the astronomical cost of specialized jet fuel today. Commercial airlines are desperately implementing massive ticket surcharges and drastically reducing their scheduled international flight routes. The tourism industry faces total devastation as international travel becomes an unaffordable luxury for the vast majority of consumers. Retail supply chains are fundamentally broken as global maritime shipping capacity remains heavily constrained by the blockade. Cargo vessels must take significantly longer alternative routes to avoid the dangerous conflict zones completely. This extensive rerouting adds tremendous transportation costs and causes severe delays for essential manufactured goods reaching their final consumer destinations. Small businesses are bearing the absolute brunt of this economic catastrophe without any meaningful financial protection mechanisms. Rising operational costs cannot be fully transferred to consumers who are already struggling with severe inflation. Consequently, bankruptcy filings are surging dramatically across the retail and hospitality sectors in almost every major industrialized economy globally. Global real estate markets are completely frozen as mortgage rates climb alongside rising government treasury yields. Potential homebuyers are entirely priced out of the market, while existing owners struggle to manage higher payments. Commercial property valuations are plummeting as businesses abandon expensive office spaces to drastically reduce their essential monthly operating expenses. Cryptocurrency markets have completely failed to act as a reliable digital safe haven during this geopolitical crisis. Digital assets have experienced massive liquidations as panicked investors rush to convert their holdings into dollars. The high volatility of these virtual tokens proves they cannot replace traditional fiat currencies during times of actual war. Labor markets are currently displaying highly contradictory signals as different economic sectors react differently to the crisis. While industrial manufacturing faces mass layoffs due to material shortages, defense and cybersecurity firms are hiring aggressively. This rapid structural shift is causing severe economic anxiety for millions of vulnerable workers fearing sudden permanent unemployment. Corporate earnings reports clearly reveal the massive financial damage inflicted by the ongoing regional military conflict. Corporate profit margins are collapsing entirely as input costs rise much faster than final consumer retail prices. Executives are completely unable to provide accurate forward guidance because the geopolitical situation remains completely unpredictable and extremely volatile. The global automotive industry has effectively halted production lines due to an absolute lack of essential components. Modern vehicles require thousands of microchips and plastics that are simply unavailable in the current market. Dealerships are struggling to survive with zero new inventory, while used vehicle prices skyrocket beyond all reasonable affordability metrics. Environmental initiatives are suffering major setbacks as nations desperately prioritize immediate energy security over vital climate goals. Governments are rapidly reactivating heavily polluting coal plants to compensate for the sudden loss of imported gas. The transition to renewable energy sources has been significantly delayed due to disrupted supply chains for solar components. Global healthcare systems are facing unprecedented challenges due to critical shortages of essential petroleum-based medical supplies. Everything from sterile syringes to advanced diagnostic equipment relies entirely on complex international plastic manufacturing networks. Hospitals are implementing strict rationing protocols to preserve their rapidly dwindling inventories of absolute life-saving therapeutic medical materials. The diplomatic landscape has shifted dramatically as nations are forced to reconsider their historical strategic alliances. Absolute energy independence has suddenly become the absolute paramount concern for every single industrialized nation on Earth. Countries are rapidly signing bilateral trade agreements to secure guaranteed access to alternative commodity supplies outside the conflict zone. Social unrest is visibly growing in major cities as the cost of living crisis becomes unbearable. Citizens are demanding immediate government intervention to control the skyrocketing prices of essential food and fuel. Law enforcement agencies are preparing for massive public demonstrations as economic desperation pushes civilian populations to their absolute breaking point. National political leaders are facing immense pressure to protect their citizens from the devastating global economic fallout. Incumbent governments risk losing upcoming elections if they cannot successfully stabilize their domestic economies quickly enough. This intense political pressure occasionally leads to short-sighted populist policies that actually worsen the underlying structural inflation problems. The United States dollar continues its relentless upward trajectory despite growing concerns about global economic stability. Foreign central banks are completely powerless to stop the massive capital outflows draining their national reserves. The American currency has effectively weaponized its global reserve status during this period of unprecedented international military and financial turmoil. Cyber warfare has rapidly emerged as a critical invisible battleground parallel to the physical conflict in the Middle East. Strategic financial institutions and essential energy grids face continuous digital attacks from state-sponsored actors. These sophisticated cyber incursions aim to maximize economic disruption and create widespread panic within the international financial community. Global precious metals remain highly volatile as traders attempt to navigate the conflicting signals of inflation and dollar strength. Silver and platinum have experienced massive price swings driven by industrial shortages and speculative trading. Investors are struggling to determine the true intrinsic value of these commodities in a fundamentally broken global market. Emerging market corporate debt is teetering on the edge of a massive structural wave of catastrophic defaults. Companies that borrowed heavily in dollars cannot possibly generate enough local currency revenue to service their obligations. Massive corporate bankruptcies threaten to completely destabilize the fragile banking sectors within numerous developing nations across the world. The technology sector is actively attempting to mitigate supply chain risks by rapidly relocating critical manufacturing facilities. However, building advanced semiconductor fabrication plants requires several years of planning and hundreds of billions of dollars. This long-term restructuring offers absolutely zero immediate relief for the catastrophic shortages currently plaguing the global economy. Public infrastructure projects worldwide are facing indefinite delays as the cost of raw construction materials becomes completely prohibitive. Steel and concrete prices have surged exponentially due to the incredible energy intensity required for their production. Governments are being forced to abandon critical public works initiatives to conserve their rapidly depleting national budgets. The sudden collapse of the global tourism industry has devastated island nations entirely dependent on international visitors. Hotel chains and commercial airlines are begging for massive government bailouts to avoid total operational insolvency. Millions of service sector employees have lost their livelihoods with absolutely no prospect of securing alternative meaningful employment today. Global educational institutions are struggling to maintain normal operations amidst severe budget cuts and rising campus energy costs. Universities are increasing tuition fees to offset the devastating financial impact of the broader economic recession. Students are graduating into an incredibly hostile job market characterized by widespread hiring freezes and massive corporate layoffs. The global entertainment industry has experienced a massive paradigm shift as consumers eliminate discretionary spending from their strict budgets. Streaming services are reporting millions of canceled subscriptions as households prioritize purchasing basic food and electricity. Massive media conglomerates are desperately restructuring their business models to survive this prolonged period of economic darkness. Global pension funds are facing unprecedented systemic risks as their diversified investment portfolios suffer massive coordinated valuation losses. Retirement accounts heavily exposed to international equities and emerging market bonds have lost years of accumulated growth. Future retirees are terrified that their promised financial security will completely evaporate before they stop working permanently. Retail investors are feeling particularly overwhelmed by the sheer speed and complexity of the ongoing global financial crisis. Decades of conventional investing wisdom have been completely invalidated by the unprecedented strength of the dollar. Many individual traders have suffered catastrophic personal financial losses attempting to bet against the surging American reserve currency. The global wealth divide is expanding rapidly as the crisis disproportionately impacts the poorest nations and vulnerable citizens. Wealthy individuals have successfully shielded their assets by utilizing sophisticated offshore accounts and dollar-denominated instruments. Meanwhile, the working class bears the ultimate burden of hyperinflation and the systematic destruction of their purchasing power. Looking forward, analysts completely struggle to accurately predict any timeline for a potential resolution to the military conflict. The extreme geopolitical complexity of the Middle East region makes negotiating a lasting peace agreement incredibly difficult. Until the shipping lanes are secure, the global economy will remain trapped in this destructive inflationary spiral. The post-war economic recovery process will undoubtedly require unprecedented levels of international cooperation and massive financial restructuring. Nations will need to completely rebuild their shattered supply chains and redesign their vulnerable domestic energy infrastructure. The total reliance on a single maritime chokepoint has proven to be a catastrophic global strategic failure. The supremacy of the United States dollar has been unequivocally reaffirmed throughout this terrifying period of global chaos. Despite years of persistent speculation regarding alternative reserve currencies, the dollar remains the undisputed king of finance. Investors have clearly demonstrated that nothing else provides comparable safety when the world actually descends into war. This historic financial crisis serves as a brutal reminder of the incredible fragility of our interconnected global economy. Geopolitical stability is an absolute prerequisite for maintaining international trade and generating sustainable worldwide economic prosperity. The eventual resolution of this conflict will permanently reshape the fundamental architecture of the entire global financial system.